Hi everyone, I'm Mirela Ciobanu, lead editor with The Papers. Wishing all our viewers a prosperous 2026 and thank you for continuing following us. This year, The Papers continues our series of articles and videos that aim to bridge the knowledge gap between traditional finance and Web3 payments. And this year, we are going beyond the buzz and we are planning to show real cases of how digital assets are integrated into physical retail systems. As such, I'm joined today by Cameron Robertson, CEO of Arx Research, the company behind Burner Payment Stack, which includes the Burner wallet and physical Burner cards that utilize secure NFC chips to enable tap-to-pay crypto transactions directly on the blockchain. Cameron, nice to meet you.
Nice to meet you as well, Maria. Thanks for the introduction.
Yeah, so let's kick off our video with telling us a bit about yourself.
Yeah, so I've been working in sort of the cryptocurrency space for the last 7, 8 years now, specifically on how one can leverage secure chips for self-custody. So the idea of making it really easy to hold cryptocurrency funds through something like a card like Burner. I come from a background in manufacturing hardware, was one of the first companies to make smartphone-controlled door locks over 10 years ago. And so, yeah, the last few years we've been really hyper focused on the idea that crypto payments are sort of the original promise of things like Bitcoin. So how do we realize them in the real world?
Yeah, I would like to learn more about this product that you are developing. So the story behind the Burner Payment Stack. I think from what I've read, you have a terminal, a wallet, a card, and yeah. Also, please tell us how all this tie into the IRX research story.
Yeah, so I guess it'd be easy to start with sort of a timeline. About a year ago, we released the Burner wallet, and it comes in 6 different colors, and it's designed for Ethereum and Bitcoin. And the idea is that this is a really easy starting point for someone to use cryptocurrency. So it looks like a normal gift card, but it's actually much more powerful, or a smart card. You tap it to your wallet, to your smartphone, and in the web browser, you're immediately shown a balance on it. So you can store funds, stable coins, cryptocurrencies like that. But everything is self-custodial. So there's no bank behind this. There's no PSP. There's no financial institutions. It's merely held on the card. And so it's a very simple, unassuming experience for someone to get introduced to crypto. So we designed this for gifting. And almost immediately after we announced it, we had a lot of different partners coming out of the woodwork saying, "Hey," and customers, "it would be really great if I could use this to pay for something using my crypto." And because it's fully NFC based, the obvious interface was if I could just tap to pay like a traditional credit or debit card. And so I would say about the middle of last year is when we really sat down and said, let's explore the concept of building a means of payments with Burner. And what we realized was the traditional point of sale stack has a lot of flexibility when it comes to things like QR codes or loyalty programs, but specifically when it comes to the NFC and the tap to pay, that's currently very locked down by the traditional EMV card scheme. And so adding tap capabilities is just going to be a much slower process with traditional POS vendors. So we decided to go down the path of building our own point of sale. And so that's what we announced at the end of last year, which is Burner Terminal. It's currently the initial device we're releasing is a small little device like this. Simple card acceptant payment terminal can be used and is designed for small merchants. So thinking of places that are focused more on cash acceptance, small services businesses, food trucks, farmers markets, those sorts of things are who the initial target market. Also businesses where it might be difficult to get a traditional merchant processing relationship. So we're going off after businesses who might typically have a sign in their door saying cash preferred or cash only. That's our initial target market.
That's interesting because at this point, you are live in the US, right?
We haven't started shipping the terminal yet, so we're going to be going
Okay.
into kind of a closed beta this quarter.
Okay, okay. And because you mentioned this, let's say more like cash-based societies or small merchants or merchants that don't have relationship with acquirers, do you also plan going to, I don't know, emerging markets like in Latin countries or in India or in some African countries?
Possibly. So we think that there's a big split between how people pay post-COVID, and so I think that in a lot of Western countries, Europe, U.S., Canada, or more developed countries like Japan, people are used to contactless.
Yes.
However, when you look at Latin America, Africa, Southeast Asia, China, people are used to QR codes, and so
Okay.
because of that split we think that this offering makes sense for more Western countries where people are used to
Mhm.
the tap to pay.
Okay.
Um, so the irony is, I could see us in Latin America, but I think we would actually go for higher end retailers there because of the cost of deploying devices and things like that versus say a QR code.
Yeah, and you mentioned that you are going to launch in beta this quarter. And I was curious, so far, have you tested this solution with merchants? How many merchants joined the network? How was it? How was the hands-on experience?
So we're in the thick of that right now. So we don't have any of these in the field live with merchants. We've done sort of a lot of testing ourselves at different events.
Hmm.
And so I think from the Web3 perspective, it's extremely simple for Web3 native users. But I think the big question for us is how do you bring more new users into using crypto without even realizing it? And so there's a lot of challenges around that we're currently working through. And then the card acceptance side is pretty straightforward. But yeah, yeah, we don't have any data from these sort of hanging out in the field yet. That'll be the end of this quarter, where we're learning a lot.
And in terms of, yeah, adoption and convincing the users to use yeah, the burner wallet and the merchants to use the terminal, what strategies have you been thinking? What
Right, right.
ideas?
So we have this very two-sided problem of convincing both merchants and users.
Yeah, yeah.
On the merchant side, the pitch is pretty clear. Your processing fees will be much lower than a
Okay.
traditional relationship. And it's much more cash-like. So in that sense, you will avoid the other ancillary costs that you see, like random chargebacks or things like
Mhm.
that. You control when the refunds process and things like that. On the consumer side, I think there's two prongs. There is the growing number of people who are already starting to use stable coins, and so the massive increase that's expected in sort of stablecoin integration. We're already starting to see it here in the US and things like Venmos and PayPal's and soon more retail banks will start to add on stable coins as well. There's some of the neobanks which have done it for businesses. So I think the availability of stable coins for people to spend them is increasing. But I do think that also on the consumer side, there can be some unique incentives that if you look at traditional card programs and you say, okay, people receive all these benefits through their credit cards, that's a forced tax on the business. We think it's way more interesting if we can unbundle that tax and we let the business sort of structure more novel rewards to the end user. And so we haven't really shown a lot of what we're planning there. But we do think that there are new ways to create better incentives that align the customer more specifically with the business they're buying from, as opposed to a card network. And so that's some of the things we're exploring to incentivize users ultimately. But yeah, it's definitely going to be an interesting challenge bringing both sides of the equation on board.
Yeah. So we mentioned kind of the ends of this equation, but how are the other parties impacted by this type of products that for sure they are going to be more and more? So I'm referring here to the MasterCards, Visas, acquirers. What is their reaction? How are they going to position themselves? What do you think?
Yeah, I mean, so um, I think structurally, all of these pieces may come back into play in different ways in terms of stablecoin
Mhm.
settlement. Obviously, we've seen networks like Visa who are very active and MasterCard towards stablecoin settlement. I think that the biggest relationship that might start to go away is cards that are tied to financial institutions. I think that'll be the first domino where the cards no longer necessarily will be tied to financial institutions in the same way that cash in your wallet is not tied to a financial institution. It's just cash in your wallet. I think that the acquirers are in between. They may be willing to sell these services as well. The challenge there becomes like, what are we going to look at the point compression of what they're taking there from the businesses? Because we don't have a traditional acquirer business. Our cost structure is very different, and so as a result, I you know, we in effect will be working as an acquirer to start with, but I think there could be some changes there. And obviously, some of the big ones have already talked about doing stablecoin settlement, but I think that's more so behind the scenes as opposed to at the point of retail, at the point of the transaction. Um, but I think there's other parties that we are very interested in the system. Independent sales organizations,
Mhm.
agents. We think that they will stick around. They actually will be the ones likely who are bringing this product to the end merchants and retailers ultimately. So I think there's different parties who will take on a new role, and they'll be selling stablecoin settlement services next to traditional payment card network services.
So in a way, everyone kind of, it's more like you mentioned the domino effect, but negatively, it also could be an effect that everyone reshuffles and then everyone brings their energy and makes the things happen. So yeah, what would be the best case scenario for burners?
Well, in our case, I think empowering the merchant to have close to zero fee transactions for digital funds would be the one of the most powerful net results. And then likewise, empowering consumers to receive rewards that incentivize them directly with that business. So I think that by adding some more efficiency to that settlement and removing some of the traditional parties, you can build a better, closer tie between the merchant and the customer. I think that the losers in this scenario would be, and we already see some upset here, potentially around traditional rewards cards. I think that that's a
Mhm.
big thing here in the United States. I don't think it was ever super sustainable, and I think that a lot of the movements and even on the legal side around the possibility of merchants rejecting specific card brands because the
Yeah.
costs are so high. So I think the way that we think about traditional rewards of being able to earn 2% cash back on everything probably won't be sustainable in the long term. But I think that'll be replaced with something better, which is, if you go to a coffee shop 3 times a week, you should get your best rewards there because you're one of their most loyal customers. And I think there's different incentives here where obviously already a lot of suppliers add on rewards on top of card payments. But if I
Yeah.
think if we start to replace them, then it's far less painful for the business because they understand like you're a frequent customer. But yeah, I think ultimately for us, we want to see a world where Burner represents a new kind of digital cash. As cash usage declines, and I'm a huge fan of cash, um, the ability to spend from your own wallet, I think, is a critical thing. So that's what we'd like to see is Burner as a digital cash network effectively.
Yeah. And to build a strong payment system, we need the compliance, we need security. From this perspective, how do you comment and taking into account your products?
Yeah, so I'll start briefly with the security side. We've thought a lot about that because it's a contactless tap with a hardware
Hmm.
wallet. And so you have to think carefully about that. And we'll be showing off more of how we've tackled that problem. But the nice thing is we can bring back in secondary factors like you have with a traditional card very easily. So we can bring in a PIN code. We can even bring in a signature, text message, notification. So we can start to build thresholds around where you can safely and easily spend higher amounts of funds in a fully non-custodial way. Now, there's other challenges like because there's no chargebacks I think users will have to think differently about how they're spending at higher amounts. But again, because we're in in-person retail, we're already looking at a scenario where, you know, a person physically handing you something is very different than sending it through e-commerce. So I think we
Yeah.
have a different challenge there. Around compliance, um, yeah, I mean, we're very excited about, again, in the Western markets between the US and the EU, around frameworks for digital assets that are giving us certainty on how to actually approach compliance. So Genius in the US and Mika in the EU are laying out the ground rules and saying, okay, here's the thresholds we're looking at for spending. Here's where we really need to trace things. So that's good. I think that's one of the big tailwinds that's supporting us in this. I wouldn't have wanted to do this 2 years ago. But then also in addition to that, we look at the stablecoin issuers now. We're not making this as a sort of any stablecoin. We actually think that the stablecoin matters because the stablecoins themselves are taking on a lot of the compliance and regulatory burden. So working with the right stablecoins, working in the markets where there's clarity, and then the last point is we will still have the capabilities around the traditional processing to analyze things like OFAC lists and things like that. So I think that the compliance side, we're not talking too much how we're approaching the depths of that ourselves, but basically it'll be somewhere between what you might see with a credit card network or a financial institution who's processing cards and cash. So it's not going to be as freewheeling as cash. Unfortunately, that's just the nature of things. But again, Genius and Mika give us a lot of sense of what we really need to look for from a compliance perspective.
Great. And since you mentioned what we need to look for, you also mentioned you give some hints of what's next on your on Burner's agenda, on ARX agenda. But yeah, what are your plans for 2026, and where can merchants learn more about your products?
Yeah, so
And then you're off the hook.
definitely. So burner terminal is we're shooting for it to be freely available by Q2 of this year, so merchants will be able to come and get set up with it. I think the beginning of this year is going to be a lot of learnings from those merchants and how people interact with the terminals, how they're paying. They can also use a QR code to pay stablecoins, so it's not just tap to pay. And then we'll be adding on some more compatibility. So we support Ethereum and Bitcoin today. We're exploring Solana support, obviously a big on the cryptocurrency side. Merchants can learn about us at burner.pro, Pro, and we have a specific page for terminal interest. We've already had a bunch of signups. We're going to start reaching out to folks on our list. So I'd say if you're a merchant or an agent or independent sales organization, you're interested in reselling these things, take a look at Burner Terminal. We're really excited to roll out this year.
Great. So lots of success, and yeah, we look forward to continue our interview and see the audience reaction.
Definitely.